The Dabur management with us on the quarterly earnings this time around, which were disappointing on the volume growth side. Lalit Malik, the CFO, with us this morning. Lalit, thanks so much for joining us. Now, this quarter, volume growth decline of 14.6%, and it's the lowest growth actually in 11 quarters. Is the weak volume set to continue? I mean, what's the outlook and what were some of the factors that led to this?
Well, I think we have been growing very well as per track till February, and we have been ahead in terms of other FMCG companies also. However, in the month of March, due to the sudden lockdown, there was a supply chain blockage that happened, and we were not able to invoice which was due, given the seasonality, specifically in case of juices, glucose, etc. So that has caused the decline of 14.6% that you talked about in the India FMCG business. When we look ahead going forward, I think April has been full lockdown, though for us on the healthcare sector as being an essential commodities. In the middle of April, there was a slow opening that happened, and also with the launch of sanitizer, we have gained momentum and may have been much better. So we do see things coming back towards normalcy. However, the impact of April and March mid-month certainly remains with us in the profitability and the revenue.
Lalit, could you detail for us to what extent operations have resumed across all segments, and by when do you actually expect it's going to be business as normal?
Well, I think first of all, business will be at new normal. That's what we understand. It may not be normal. However, having said that, almost 60 to 70% of our manufacturing units are currently operational, though all manufacturing units are open now, but we are working with 60-70% of the capacity. And as far as the supply side is concerned with regard to the C&FAs as well as to the distributors, I think barring few areas which are in red zone where there are restrictions, we have some restriction with regard to supply. Other categories, including rural and all, have come back to normalcy. Our GT is doing very well. In fact, e-commerce is growing more than 100%. We are almost 3.1% of our revenue now comes from e-commerce. So I think there are different channels which are giving promising return in the new normal. However, there are still some pockets which are in the red zone where there are some restrictions, and we await that to get normal very soon so that we can say that we will be back on full 100%.
What of the balance sheet at this juncture, and thereby your ability to service debt, if at all, in future?
Well, as far as our balance sheet is concerned, we have a very healthy cash surplus, which is more than 3,800 crores with us. So we don't see there is any stress with regard to the balance sheet or the liquidity. I think we are in a very strong position there. Having said that, we are still being very careful with regard to our working capital management so that we don't see any stress that's coming even on the working capital side. And we are being very careful in terms of our operational cash flow also. So keeping that in mind, we do not see any implication on the liquidity or on the cash availability side for us in Dabur.
Now the volume numbers, what we discuss, are numbers which are dispatched by the company. That's a function of demand and inventory. Could you fill us up there that where are the inventory levels and what are the chances that because of the lockdown inventory levels have got depreciated, and when we meet next time you could actually show a big uptick in your volume growth purely because of the inventory restocking?
Well, I think what happened for us was that both our primary invoicing as well as our secondary invoices both stopped in view of the sudden lockdown that happened. And there was a treasury retailer inventory which of course was moving given the lockdown and the essential commodities, so which we have got it filled up completely now. So there is no implications on that. Yes, in the short run there was inventory increase that happened, but that was not very material, and given the fact that we are currently operational on 60 to 70% of our capacity, I think there is no major deviation that we see with regard to our inventory pile-up or with regard to any shortage, because we are monitoring again the demand and supply side very carefully. In fact, on a daily basis, we have our reviews happening so that we are able to match with the demand. So give you an example, since our healthcare category is moving very, very fast, for Chyawanprash, we are almost at 400% growth right now. So we have accelerated production of that, and therefore we are able to meet the increased demand in view of the health awareness and in view of the hygiene for that matter. Our production for sanitizer has actually moved up. So there are different pockets where the demand is increasing, and therefore we have increased our production and supply. There are areas which are slow, discretionary items, where we are going slow with regard to production, so that we are able to manage the inventory in such a way that there is no loss of sale in case the demand comes back.
Okay. Before Dabur numbers came out, me and Aisha were discussing that Dabur is in a special situation because unlike other FMCG companies, you have a strong rural presence. Your healthcare portfolio is a strong portfolio. Immunity need and other categories should grow. And the categories which you represent, if they're rural focused, rural India has got less affected and you should have got less affected. But that view post your numbers has got challenged. Why do you think our view, which was very bullish and a very logical view on Dabur, because of your category, because of your presence, because of your rural brands, we were hoping for better numbers. Why has that got challenged? Is it only because of lockdown, or somewhere you think demand is looking weak and it would have looked weak irrespective of the lockdown?
Well, I think I will put it this way. It is primarily because of the supply chain lockdown that happened, which has an impact. Because if you look at our category of products, our juice category and glucose was actually a peak season for us, given the summer kind of setting in. If the things were normal, we would have been on track. And if we look at our YTD February number, I think there has been a very healthy growth that we had seen almost at 4.5% from revenue from operations. And therefore, it's primarily on the supply chain side. And when we talked about rural, in fact, we have extended our village coverage also by 52,000, though our target was to reach 55,000 villages, but because of lockdown, we were not able to expand. And we also have around 1.2 million direct reach. So I think that was not an issue with regard to the reach on rural. However, because of the supply chain lockdown, this got accelerated for us in our categories.
Okay. What is the near-term priority? Do you want to get growth back and compromise on margins, maybe roll out more freebies, maybe give more discounts, or you would say growth will come back, but I will not compromise on my margins?
I think in current scenario, there are two things very important. Number one, it is very important to have the healthcare products that we manufacture to be made available to people at large, because that's a need in the country right now. So therefore, our first focus is to have all our products, whether it is Chyawanprash, whether it is Tulsi Drop, Haldi Drop, Giloy, etc. We want to make sure that that's available to people at large, because that's a very important ingredient to improve the immunity. Second, on the hygiene, sanitizer, etc. is our focus, that it needs to reach out. Regarding the margins, when the volumes are affected, there would certainly be pressure on the margins. For that, we have undertaken a very strong cost-saving initiative under the project Samriddhi, where we are focusing on zero-based budgeting and questioning every line item of expenditure and addressing that in the new normal scenario, what is essential for us to work towards, so that we are able to maintain our margin even given the scenario when the top line is under stress. So that has been our strategy and approach. Number one, making sure that we reach out to our consumer with the products which are important in the current scenario for them, making sure it is affordable for them, and in order to maintain profitability, ensuring that our costs are under control given the new normal scenario, and we are able to leverage the cost reduction so that if we have a synergy available there, we are able to claw back by giving more incentives and more support to the consumer and trade in order to reach out in wider scale and also to gain the market share at the marketplace.
Appreciate your time. So glad you could join us.